Hello friends, welcome back to my channel Quest for Knowledge. Today we are going to learn important 2 marks of the financial management. So first of all, we'll understand what is the meaning of financial management. Okay, let's get started. So the meaning of financial management is, according to Bradley, financial management is the area of business management devoted to the judicious use of capital and a careful selection of sources of capital in order to enable a business firm to move in the direction of reaching its goal. It is nothing but how to deal with the finance, how to use the capital, and how to select the various sources of funds and various sources of capital, everything which is related to finance, cash inflow, outflow, everything when they deal with the finance or funds, that is called as financial management. What do you mean by financial planning? So financial planning refers to the blueprint of a firm's operating or commercial activity, the investment it requires, the sources of fund to be used, all in a time phased schedule. So planning means something which we do in advance. Okay, when we make some plannings, so when it is related to finance, okay, when to do the investment, how to do the investment, where we are going to get the sources of funds, so when we plan in advance, so that is financial planning. Now let's discuss what are the concepts of time value of money. So the concept of time value of money, it is the principle of time value of money, signifies that money has time value. Every financial decision must be made on the basis of the PV or discounted value, price value or discounted value of cash flow. So return from investment proposal. So the time value of money is nothing but every money has a time value. Why? Because our money doesn't, the value doesn't remain same. So that we need to make the financial decision as per the price value, as per the discounted value, okay, of the cash flow. So that is why that is the concept of time value of money. What do you mean by flexible capital structure? Flexible capital structure means capital structure of the firm should be flexible, so that without much practical difficulties a firm can change the security in capital structure. Redeemable preference share, redeemable debenture increases the flexibility of capital structure, so it can be redeemed at the discretion of the company. So flexible capital structure means how we can easily adapt to the changes, how we can easily make our capital structure suitable to the needed circumstances and situations. So we can do as per when we have some kind of a shares like redeemable preference share or debenture, whenever we want we can change those shares into debenture, and debentures can be turned into shares, so as per our facility. So that is why we need to have a proper capital structure which can be twisted according to our need. What do you mean by trading on equity? What do you mean by trading on equity? Trading on equity occurs when a company incurs new debt like bond, loan or stock to acquire asset on which it can earn greater return, where they can earn greater return and than the interest cost of the debt. So trading on equity occurs when a company makes new bonds or loans or preferred stock, so that to acquire more of the asset, from the asset they can earn more of the return instead of paying interest for the cost of the debt. So that is what it is called as equity trading, trading on equity. The question we have is, what is net present value method, and mention any 4 components of working capital. Okay, let's discuss that one. So the net present value is considered to be the best method for evaluating the capital investment proposal. It is a method that take into the account the impact of time value of money. In case in Npv method, the cash inflow that acquire at different time periods are discounted at a particular discount rate to arrive at the present value of cash inflow. So Npv method is considered to be best method for evaluating the capital investment proposal, in which will be the better investment. So it is a method which we take the time value of money also, and Npv where we actually take the cash inflow, what and all, how the money has come into where we discuss about the money which has come to our company at different time periods, which has to be discounted on a particular discount rate, so that we can go to the present value of those cash inflow. Okay, for example, we got the money 6 months before, we got the money 8 months before, so that and all, that money is what and all we have got inflow, that will be discounted at a particular discount rate according to the, to arrive to the present value of those inflows. Mention any four components of working capital. The four components of working capital are cash and bank, stock, debenture, accounts receivable and marketable securities, and bills receivable. So these all are the four components of working capital. Working capital is our the money which we use for our day to day operation. That is why it is called as working capital, and long term it will be short term. Okay, so these all are the four components of that. So the next question is, what is wealth maximization? Okay, let's get started. Students, what do you mean by trading on equity? The question, which can be even asked as what is financial leverage. So that the answer should be the use of long-term fixed interest and dividend-bearing securities like debentures and preference share along with equity is called financial leverage or trading on equity. So object here is to get maximum benefit from the use of the debt capital in order to give benefit to equity shareholders in the form of dividend, so that the more they'll go for the equities, trading on equity, the more they will get the dividend for the, they can bring the good reward, and the reward can be shared with the even the shareholders in the name of dividends. What is wealth maximization? Wealth maximization refers to creation of wealth of the concern. In other words, it refers to the increase in the market value of shares. So it is the creation of wealth, so that is wealth maximization, and it increase the value of our share, so that is why it is considered as wealth maximization. The next question is, what is financial plan? The financial plan consists of capital structure, capital expenditure, what will be the cash flow, which is inflow and outflow. It refers to the mixture of own capital and borrowed capital of a company. It are means, the way of making available the well thought out equity capital of a company. So how you are going to make the investment decisions, how, what will be your cash inflows and outflows, what are the sources of fund, how you are going to expand, you are going to raise your capital. So all these decisions are taken under the financial planning. So what and all the financial expenditures are there, what and all the financial incomes are there, what is going to your capital structure, so that all will discuss in your financial plan. What is time value of money? We have already discussed. What is optimal capital structure? So this is the answer of the time value of money. So what is the money of today, how it is going to be worth it when compared with the future one? So it's nothing but a common description for the general rule that cash in hand today is worth more than the same amount of cash in the future. So that is the time value of money which is used in investment decision. After that, optimal capital. So what is optimal capital structure? OCS refers to that capital structure or combination of debt, equity that leads to the maximum value of the firm, thereby the will of its owner, that increases with the minimization of cost of capital. So optimal capital structure, it is a combination of debt, it means how much of borrowed money is there, and how much of equity, which is of owner's money or borrowed money, but it will define as ownership. Okay, how it is the, you're going to increase the value of them, and you can create more wealth by minimizing the cost. So that is the optimal capital structure. And how do you calculate operating leverages? The operating leverage occurs when a firm has fixed cost which must be recovered irrespective of sale volume. The fixed cost remaining same, the percentage change in operating revenue will be more than the percentage change in sales. So these occurrence is known as operating leverage. So the formula for the operating leverage is the contribution divided by earning before income and interest and tax. Operating leverage occurs when a firm has fixed cost which must be recovered irrespective of sale value. Okay, and the fixed cost remaining same whatever be the percentage change in the operating revenue, and it will be more than the percentage change in sales, and thus occurrence is known as operating leverage. It means to deal with the fixed cost, and it has the no relationship with your sales. For example, rent of the factory, whether you are doing the sales or not, but you have to pay some of the cost to pay them rent, so that is operating leverage. Likewise, it is considered as some of the fixed costs you have to recover whatever be your sales. And now we'll discuss what is accept and reject criteria in NPV. What is accept and reject criteria in NPV? It is positive. If the project is positive, the project should be accepted. On the other hand, if the project is negative, the project should be rejected. So that is the criteria of calculating NPV. What are the sources of working capital? The sources of working capital is trade credit, bank borrowing, factoring, commercial paper. So you will have a credit paper, okay, like from your bill you can show that into the bank account, bank, and you can get a loan from there. So these are all the various sources of working capital. So this is all the 2 marks we have discussed here, and I would like to put a word to you that the third chapter is very important. From only preparing third chapter itself, you can cover 32 to 35 marks, it seems. So go through with the third chapter thoroughly, and these are all the important 2 marks we have discussed, and try to write as general as possible, like however and how much you know the answer, how much do you know the concept. According to that, try to write the answers according to that. And if you found this video helpful, do like, share, subscribe, share it with your friends, comment your suggestions, and do hit the bell icon so that you can get all my latest updates and notification. Thank you so much for watching.